because it's somewhat the same as the United States, but like you said, a little lighter on the regulatory obligations. And at the same time, there are safeguards for people. We have contracts, we have titled property, and here attorneys do everything. They write the contracts, they execute the contracts between the parties. Sometimes each party will have their own attorney. And when you buy property in Panama, any foreigner is free to buy. You don't have to live here necessarily, and you have the same rights as any Panamanian. So you're protected in the same ways that any Panamanian would be.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CREPN Radio. Thanks for joining us. My name is J. Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Anne Michelle Wan. Anne Michelle is an international real estate expert and conscious investor. She's a former single mom turned successful real estate entrepreneur who now lives in paradise on a Caribbean island in Panama, debt-free. And in just a minute, we're going to speak with Anne Michelle Wan about real estate investment opportunities outside the U.S. But first, a quick reminder, if you like our show, CREPN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how attractive our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Anne Michelle Wan. Welcome to CREPN Radio.
Well, thank you for having me, Darren. It's a pleasure speaking with you today.
Well, I'm delighted to have you, and I'm looking forward to our conversation. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
I've actually been an entrepreneur most of my life, and a lot of that's been in real estate, although I have owned a couple of other businesses. The last 35, 40 years have been in real estate, and I started out as an agent, working my way up to my own business, and then moving to Panama and opening my own franchise. So I've had a lot of experience. I've been here in Panama. I bought property here 25 years ago. My husband and I have lived here full-time since 2010. 10 of those years I had the real estate franchise. I recently sold it and semi-retired. And now I do development in multifamily investments. Awesome.
Well, I'm really looking forward to our conversation today. I noticed in some of the information that I received before or when I was looking up and preparing for this was financially free. I'm curious that that topic is definitely gets a lot of buzz, and everybody's interested in how do you get financially free. How did you do it, and how long have you been financially free?
Well, I have been financially free since 2010, when we actually moved to Panama. Before that, I had a regular mortgage in Colorado, which is where I hail from. Lived there for 35 years, raised my family there. invested also in real estate there, but in the United States, you put, 10 or 20 or 3 or whatever percent down and you get a mortgage. In Panama, that's not so easy to do. Can be done, but it's a lot more complex. So we tend to, I wanted to be debt free. So it was attractive to me to step by step build up my equity till I had the cash to buy property or to build property. And I ended up buying 2 properties here. Both of them were land, of which we subsequently built structures on. One, a commercial property in the little town of Bocas del Toro, and another one on the island of Solarte, where our private home is. And it took us a period of time to do that. We didn't have enough money to just build a $300,000 home all in one shot. So I would liquidate a property in the States from having built my real estate empire in the States, where I had been doing rental properties and fix and flips in apartment buildings back then, and had also done some private equity deals. And the first cash that I put down here to buy the land was I took a home equity line of credit out of my home in Colorado, which I had bought originally for $150,000. And then by the time we lived in it for a few years, it appreciated to over $500,000. And I was able to, at the time, interest rates were really low, like 3% or something. And I was able to get a home equity line of credit. And I came down to Panama with cash and found something in my budget and paid cash for the land. That was the first step. Then we just held on to that because holding on to land here in Panama is really inexpensive. You pay little or no taxes, and since it was just land, there was no upkeep very much on it. So as I developed a little more, I had a few properties in Colorado, and one by one I would divest them or pull a second line of credit on them in order to finance things down here. Finally ending with, I think in 2021, I sold my last condo, and we were able to finish everything and become debt free. So I own my own home and my own commercial building, which I now rent out since I retired. So it provides more passive income for me, both of them with no mortgage on them. It's kind of the overview of it.
Yeah, no, I appreciate you kind of going through that. I always enjoy hearing how people get started and then how they, kind of get through it and to where they are now. So you are living in Panama full time, correct?
We are since 2010 when we made a decision. It was after the 2008 crash. And of course, like everyone else, we lost some of our retirement portfolio. A lot of it was in real estate. And we had to reevaluate because we wanted to retire early. We were in our late 40s, early 50s at that time. And didn't want to really give up the lifestyle and have to go back to work the way we were before. So decided just to take the leap. I already had the land, moved to Panama. I started the franchise here, was very successful with it because there was only 3 real estate companies here at the time, and none of them were global. So when I opened a global franchise and started bringing in the business, I could see that there was another boom happening, that the recovery after 2008, and people were moving here like crazy, and they still are even more. So I had a very good income from the franchise, and I was able to show property in a boat and have other agents help me, and was able to then finance, ongoing construction in our various enterprises.
Got it. So it sounds like it's a growing market where you're located.
Very much.
So I'm assuming the demand exceeds the supply. Is that kind of
It does, and
right?
I've kind of become known as the gap filler, because what I see is where we don't have something here. There's so much opportunity to fill the gaps. You know, there's not any big box stores. So if someone were to say, open a Costco here, they would probably do very well or something like that. But there's lots of opportunities. Mine were in real estate. And like I said, I saw the opportunity for the franchise. You know, I was United Country at the time. And I continued to see the opportunities. There was a lack of supply of homes that people were moving down here and wanting between the $150,000 and $250,000 range, which was a widespread that people actually could afford to pay cash for from their savings, you know, or their equities. So I built during the time, I built a couple of houses and sold them. And because they were in the sweet spot, they sold quickly. And now that price point has moved up some 10 years later. And another house that I built was in the $400,000 range, but there's also a gap there and it sold quickly. Now, I'm a firm believer in providing passive income, and the best way to do that is multifamily. So my next project will be a multifamily project that will create, you know, passive income for my investors. And I will build that in the next 3 years.
Got it. So just to back up a step here, the homes you were building and selling, you said 150 to 250, was that right?
Yeah, to 250.
Okay. Just for reference, how big of a home was that? And that was obviously 15 years ago, but I'm just kind of curious what kind of
Yeah,
a
they were
square
smaller
footage.
homes because people tend to downsize here for the most part. So they were like 2 bedroom, 2 bath, 1,000 to 1,200 square feet. In that range. And I try to stick to waterfront because that's the most desirable locations. You know, I would find desirable lots on the waterfront in the area and make sure they were titled, because we have both titled and untitled property here. So it makes it easy again for the buyers to buy them and keep it in that range.
Got it. So your Colorado investing, was that primarily single family? You mentioned condos. What were you invested in there?
In Colorado, I did a variety of investing. I actually started out with doing excess land. One of the things I believe in is I do mix business with pleasure, and people say that your home is not an investment. It's your home, and an investment is an investment. But I always wanted to look for a home that was also an investment. And I found a house, my first house that I bought in Boulder, Colorado, back, anyway, it doesn't matter when, in the 80s. And it was on an acre of ground that was at the edge of the city limits. And I found out that if you annexed into the city, you could subdivide that lot into 4 lots. The house was on one and had 3 extra lots. So I did that. I bought the house, subdivided the land, hooked up to the city services, sold the 3 lots, made enough money to buy another property, and lived in the house for 5 years before selling it at a profit. And that was my beginning in real estate. And it was single family homes in the beginning, but I did that 2 more times where I bought homes with excess land, sold the land, then sold the houses. They were usually fixer-uppers. Sold my own house after 5 years and bought a bigger house because I had 2 teenage boys by then. Bought a duplex, bought small apartment buildings. You know, just you had to, in 1031, you have to exchange up to a more expensive property. So the properties kept getting larger. I had a commercial property. I owned 2 salons, and I had one of the buildings I owned where the salon was. So I had a small commercial property. In retrospect, I never should have sold that one. It was a historical Boulder property where CU's first woman faculty member lived.
Oh, wow.
At one point, I had 5 single-family homes in Boulder and a 44-unit apartment building in Denver, plus my duplex. What else? And my ranch that I lived on 4 acres. So
Wow.
then we started investing a little bit outside of Colorado and went to Florida and did some investing there. My partner at the time also did some investing in other states and owned in 4 different states in the United States. And for me, I always wanted to live on a Caribbean island. That was one of my goals, is to live in a cottage by the sea, and now I do. So, I searched out. I went to Mexico, I went to Belize, I went to Guatemala, Nicaragua, all those places in Central America because I wanted to stay fairly close to the United States. Although I did try my hand at Hawaii. My sister and I bought a vacation home in Hawaii in the 90s, right after Hurricane Nikki. We owned that for 5 years, built it up and resold it, and that's when I bought the land in Panama. So
Okay.
it was an adventure, and one that I've really enjoyed and never looked back or regretted.
Yeah, no, I think the constantly being on the look for, next opportunity and not having such a limited territory that you're willing to look in. I know clients of mine, my insurance clients that have kind of, looked on the globe or the map and just said, huh, wonder what's going on there. And they go and find out and they say, oh my God, there's such an opportunity. And next thing you know, they're deep in opportunities in that community, kind of emerging, opportunities. And,
Exactly, exactly. I
as,
love how you say that, emerging markets.
yeah, as opposed to, a lot of times you hear people in a particular area, they go, oh man, prices are so high now compared to what, there's always the local interpretation of the past versus now, and prices are always higher today than what they were, and at the time, people probably thought they were high then too, but the lack of foresight, only hindsight, it's kind of a limiting thing. But if you can take a particular situation and recognize the phase that a place is in and
Yes,
compare it to another thing and see the opportunity. I've always been impressed by people that can do that and are comfortable and fluid enough to be able to recognize and have a goal and go out and do that, as opposed to the market's just now, I'm going to wait. And it's always easy to wait, but I mean the hardest thing is to act. It's one thing you can read all the books, listen to all the podcasts, do all the analysis you want, but until you have a plan and go act, it's all or not. And so I appreciate you, or appreciate anybody that has that opportunity, the vision and the kind of the personal freedom to.
yeah, you have to be brave enough to act, to take the leap and have the faith that you can learn the skills or do whatever needs to make it happen. And I've always been that kind of person. When I walked off the plane and first time in Panama, I said, this is an opportunity. There was just so much they needed here. And here, 20 years later, 20 plus years later, a lot of it has happened. When I first moved here, you couldn't get a salad. All the salads in all the restaurants were cabbage salads because they couldn't grow lettuce here. It was too hot. Well, as expats moved here and demanded, a different kind of food, they started importing from the mountains. We have beautiful mountains here that are 4,000 feet above sea level, and they can grow the lettuce up there and ship it down. They just never thought about doing that before. So now we have 5 different kinds of organic lettuce, strawberries, and stuff we can't grow down here gets shipped in a couple times a week,
Oh, that's great.
and lots of
Yeah,
things like
no,
that.
yeah, no, but having the vision, because again, kind of even what you're describing there is the locals there didn't see the opportunity because it all, this is the way we do it, kind of thing, as opposed to recognizing how to connect the dots and make it happen. Um, I got to ask you, so one of the things I recognize, or I think more people would be comfortable investing in different states, just from the
Mm,
standpoint of there's, some formal um, guardrails that are set up that are fairly common state to state. I know there are some states that get a little kind of color outside the lines a little bit, but for the most part, I think that if you in the 50 states of America, there's some uh, guardrails. There's some ways that business transacts. It's fairly consistent. Uh, taking title, the rights to the land, the um, the what am I trying to say? The safeguards
Mhm,
are
mhm,
fairly uniform. But when you go outside the U.S., one of the things that I love is that some of the noise and the rules that we have in the U.S. That can be overburdensome don't exist. But
mhm,
at the same time, some of the safeguards that we kind of
mhm,
just come to take for granted
mhm.
also don't exist. So when you are looking to invest, and specifically your experience down there in Panama, um, what are some of the things that you found not to be what they were where you'd invested elsewhere, or are there some cautionary tales that you've learned, or some things that an investor needs to be concerned about?
Okay. Well, I'm glad you asked that question, because it's somewhat the same as the United States, but like you said, a little lighter on the regulatory obligations. Uh, and at the same time, there are safeguards for people. Um, we have contracts, we have titled property, and here attorneys do everything. They write the contracts, they uh, execute the contracts between the parties. Sometimes each party will have their own attorney. And when you buy property in Panama, any foreigner is free to buy. You don't have to live here necessarily, and you have the same rights as any Panamanian. So, you're protected in the same ways that any Panamanian would be. And that makes you feel a little bit better. We don't have mortgage brokers. If you need a loan from the bank, you have to go directly to your bank here in Panama, because generally US banks won't lend outside the country. Unless you do it the way I said, where you're borrowing money from yourself to do it, or you have a stock account. And now we do have one or two mortgage brokers that will lend on, say, your stock portfolio. But in the past, it was just banks, and you would have to come down here, say you moved here as an expat, and you would establish a relationship with your bank, and that bank would loan you money for a mortgage for a house if you lived in a city, for example. We also do have title companies. However, most people don't use them. Attorneys, again, do all the research and the due diligence and finding. We have a public registry where you can look up the history of any property and find out what's happened to it back to day one. And your attorney is responsible for doing that for you and keeping you safe. We use the US dollar, so that's an easy conversion, 1 to 1. The government is a democracy, so that feels pretty safe. And Panama is one of the safest Latin American countries with a low crime rate here as well. So that's another safety feeling that people have when they move here. Is there any other questions you have that I've
No,
missed?
I think that you did a good job just kind of going through some of the I guess the bullet points, some of the highlights that would, give any kind of an outsider a little bit of comfort as to what they were getting into, as opposed to, you don't speak the language, the currency is something different, there's no title, or, there's, or you have to be a resident in order to invest. Any of those things that do exist elsewhere, where you're not, on equal footing as a local, I think would be reassuring to have that as your starting point. Um, and so let me ask you, so when you are investing, are you always investing yourself, or do you ever invest with others, or how do you
Oh, I
how do you
invest
feel about it?
with myself, and I invest with others. I currently have a partner who's a dentist in Virginia. And we met when he bought a house down here in Panama and became friends. And when he wasn't able to stay here as often anymore, he said, I just love Bocas, but I can't stay here anymore. I have to go back to Virginia. but I really want to still invest here, and would you be my partner? So we became partners, and he finances all of my building for the single family homes that I've been building, and then we split the profits when they sell. So I do partner with individuals, and my new multifamily company, I will be partnering with a group of people because it's a larger investment to build, say, 32 to 40 units.
So in that, the single family seems like a pretty straightforward arrangement. You've got an investor, and you're basically the local coordinating all the construction and sale of the property. That seems
Mhm.
pretty clean. When you get with the other larger properties and more investors,
Mhm.
is that in the U.S. we all right, there's a couple ways. I mean, syndication is the one that comes to mind. It's probably
Mhm.
most prevalent. Is it a syndication that you'd be doing, or junior, or how
It's
would?
similar. We don't have actual syndications here. It's a
Yeah.
little different, but we do have where I form an LLC with a general partner and limited partners. And so I would be the general partner in this case, and my passive investors would be the limited partners. And so they would invest the money. I would make everything happen just like I do for the single family homes, and then they would enjoy the profits, at the end when we started generating those profits. It generally takes, for houses, it takes me less than a year to build, but with a bigger complex, it's going to take more like 2 years to build, 1.5 to 2 years to get the permits to put everything in place and build it. Although I'm not maybe able to do it faster just because today we have modular components we can bring in. We don't have to stick build anymore, and we can incorporate green features and sustainability and green wastewater treatments and just bring everything in and put it together almost like Legos. So I may be able to do it faster than I think, although I haven't done that yet. When remains to be seen, but I feel good about it.
So with this multifamily, um, investment that you're looking to build, uh, do you raise like would your capital raise be like a percentage of, like, equal to like a down payment, and then you go finance construction through banks, or do you raise all of the capital and then just wait until the thing sells to return capital to your investors?
Well, this is one of the things that how I build safety into this particular type of investment is that I raise all the money up front to build it. And then when we start cash flowing it, let's say it takes 2 years to build and another year to get up to occupancy, and maybe another year to be optimal, occupancy. But so in starting in year, say 2.5 to 3, investor would begin getting their money back. It would be at least a 5-year investment. And in year 5, when everything was optimized, systems in place, and everything sold or rented out, depending on the what we're doing, we would then apply to the bank for a loan and pull 50% of it. We should have a value add by then, and the property will be worth at least double what it was cost to build it. We should be able to pull out 50% and get a 50% loan, return the money to the investors, and then own the property debt free, as is one of my, ways that I like to do things now. And or we could sell it at that point as well.
Sure. When you say debt free, you mean everybody that put their money in, they would have all their money back, and now it's
They would
just the
have their
property.
right
Property
year
supports
5 to 6.
itself.
All right,
Yeah.
5 to 6, they would have all their money back that they put in.
But you would have a mortgage on the property, but nobody would have. I mean, everybody would have their money back. It'd just be there'd be a loan on the property, and then
There'd
they'd
be
be
a loan on
basically
the
getting the
property, yes.
gotcha cash
For
flow.
the company, the corporation would own it, and everybody has shares in the corporation.
Grr. Right. No, I just want to make sure I didn't miss something there. So, um, no, I love that model. From a standpoint of you basically have lowered the risk significantly with, with what's been going on here locally. I mean, not locally, but
Mhm,
just in the U.S. with the Fed and the interest rates and
mhm.
all that, and how that's really created some challenges for investors if they hadn't foreseen or planned, appropriately for a downturn or an interest rate increase or what have you. So and with that, you're not on a timeline other than the fact that you want to get it built and full, so that you can then go.
Exactly.
Yeah,
And with that kind of safety measure built in, you can handle downturns, because you don't have to come up with a huge mortgage payment. You can, if there are delays, you don't have to worry about it because you don't have that strict timeline with the bank.
yeah,
You are the bank.
right. And with that, I'm curious. A property, 30 to 40 units, um, all in. What kind of capital raise would you expect to have in order to, be able to buy the land and build the property for that?
Well, I've already located the land and found a joint venture partner to provide that land. It's 3.5 acres on the main island of Cologne. Uh, and so aside from that, I plan to raise $6 to $7 million to build the units. And it will be a combination of um, tiny homes, shall we say, or smaller homes for people to live in. It's going to be focused on an over 55 population and their digital nomad sons and daughters that can live and work from anywhere. So we'll build two different types of units focused on those markets' needs. And then the over 55 will probably be rentals, long-term rentals, that will provide amenities for those people in an independent living kind of situation. And then the digital nomad units will be a little bit larger and will be separated and on the land. And there'll be a community area where everybody can gather to do recreational activities and people can register, have transportation, or hike in nature. We have a lot of beautiful nature here, stunning nature that people can take advantage of. And it's my idea that as people age, they would thrive in a place like this if they're willing to take the leap and move outside the country.
Oh, sure. No, if you to be in a warm, sunny climate with lots of healthy, like-minded people, that sounds inviting to. I think most everybody would be on board with that. Um, well, that's fascinating. I love the model. I think, especially having seen what's happened here with the kind of the go hard fast with the low interest rates, to see the challenges that some of those uh, investors or syndicators and just investors. I mean, if you just, I think having a long runway kind of vision to real estate's always been kind of fundamental to my understanding of real estate. It's not been kind of I think a lot
Right.
of people, I think, that uh, get in with syndications a lot of times kind of look at it as like a stock. It's, get in, get out. And it's not that really. It's, I mean, if you time the market right and you get lucky and you find something that is undervalued and can be, polished and sold quickly because interest rates are favorable and there's competition in the marketplace and people are wanting to get in the market, then that's one thing. But that's not always the case. I think that's kind of more the exception, at least in my experience in investing. It's been more of kind of a long-term, um,
Mhm.
you know,
Although
get the.
one of the things that's different about this company is I believe we're in the process of developing an exit strategy for people that might want to do it short term, because they're going to create a secondary market that will buy your shares. And usually when you do like a group purchase like that with fractional ownership, there's no exit strategy, for the 5 years at least, there's no exit strategy and limited places to sell your shares. But with my partners that I'm working with, we're going to create that secondary market. So there, if a digital nomad gets in and then decides he's going to be transferred to another country, he'll be able to sell his shares to another digital nomad potentially with our system in place.
Sure. Would that be limited to the other investors, or would he be able to sell it outside of the?
No, it'll be able to be sold outside, but within this structure that we'll have created.
Cool. Now it sounds like, and I'm certainly not an expert on this, but a little bit I know like about blockchain and that kind of stuff. I could see how you could somehow create a vehicle for, you mentioned digital nomads. I just was kind of like
Yes.
combining some ideas there, but I could see that totally being a workable model and one that we're probably not too far away from. I think I think the resistance to a lot of the digital stuff, at least digital currency, has been at least in my limited understanding and interpretation, is the government has the ability to manipulate the currency in the current marketplace to, get us in or out of a recession or stimulate, investment, and also make the budget work. If you borrow a bunch of money, you can drop the interest rates down so it doesn't cost as much to pay back the what you borrowed, and so but you kind of lose that if you go into the outside digital things. But for like an individual investment, it seems to me like it makes complete sense to be able to
Mhm.
allow people to come and go. But that's kind of a whole other topic.
Yeah, that's a whole nother topic, but we are going to be
Yeah.
incorporating people to allow people to pay in digital currency if they have that.
Yeah. Cool. Cool. Um, so let's see. I was just looking at some of my questions I had here. We talked a little bit about loans. Talked about how you. I love I love the model you have about raising all the capital. That to me is one that speaks to me
I
a
learned my
lot.
lesson in 2008, and that won't be repeated. And I see, it's happening again here with the commercial uh, properties, and it's a little different. It's not exactly like 2008, but it's basically these loans coming due, and people can't refinance at the high interest rate, so they're forced to sell their properties, and they're not making cash flow anymore, and it's going crazy up there. So I'm not at a place where I want to risk my money anymore. And I think real estate, every investment has some risk. There's always downside, but I feel very safe about this model.
Yeah. No, agreed. Agreed. Hey, Ann Michelle, if we could, I'd like to shift gears here for a second. By day, I'm an insurance broker, and as such, I work with my clients to assess risk and determine what to do with the risk. And there are three strategies that we typically consider. We first look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we are not able to avoid nor minimize, we look to see if there's a way we can transfer the risk. And that's what an insurance policy is. It's a risk transfer vehicle. And as such, I like to ask my guests if they can look at their own situation. Could be your clients, the local government, your investors, the marketplace, whatever it is that you identify and consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance related answer.
Yeah.
And so if you're willing, I'd like to ask you and Michelle Wand, what is the biggest risk?
Well, I think I touched on it before. I think one of the biggest risks is over leveraging your product. And the um, so that's how I've created this whole business model to minimize risk by having all the money paid up front and owning the building outright, and then having the ability to refinance it when conditions are favorable, in order to pull out investors' money. And that allows you to withstand any downturns, delays, or economic factors that may be happening in the outside world, and you're still going to have cash flow. The way I've designed the project, it's going to break even at 23%. So anything above that should be cash flow back to the investors. It'll start out small, it'll grow, and people will also have the ability, there'll be a section in there where people can actually come and enjoy a vacation or live, or for the over 55, live there full time. So your amount of return will vary depending on how much you use your property. But, that's how I see, minimizing risk is putting the solidarity there of the land. Land, generally doesn't go down in value. And if it does, it goes back up on a scale, may go up and down a little, but if you track it over 20 years, it goes up. They're not making any more of it, and especially land on a Caribbean island. That's a very desirable land, whether it's right on the ocean or not. Another wonderful factor about Panama is we don't have hurricanes, so people can get out of the hurricanes. We don't have earthquakes. It's safe there for your land too. You just need to make sure it's elevated and not right at sea level for the rising seas that is happening. Does that make sense?
Yeah, no, that's great. Considering the pain that, the markets, or when I think of, in the U.S. anyway, anything that's close to the water, especially, Florida, the Gulf Coast, that kind of thing, it's hurricane. And that's a big problem there. So that would be good. Hey, Anne Michelle, where can the listeners go if they'd like to learn more or connect with you?
Well, to connect with me, I have a LinkedIn profile, Anne Michelle Wand, and my page is Passive Profit Partners, the name of my company. I also have a website, and it's www.passive-profit-partners.com, which tells you about my current projects. And that would be the best way.
Got it. Well, Anne Michelle Wand, I cannot say thanks enough for taking the time to talk. I've enjoyed it, learned a lot, and look forward to doing it again soon.
All right. Well, thank you so much. I really enjoyed this as well, Darren. And it's really interesting talking to an insurance broker about real estate. So thank you for enlightening me as well.
Oh, my pleasure. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.